Hello and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good morning. It's Monday, the 3rd of August 2026, 9:59 a.m. The market's about to open. The pre-market indicator is negative. I'll just pull that up from NAB. One moment. Sorry, I should have had that ready. Okay, so they were indicating that the market will be down 86 points or 0.96%. That's quite significant move downwards. We currently are looking for some buying opportunities. As you know from the previous videos, we sold out of 3 positions last week and just were not able to rebuy due to pricing. So we'll have a look at my approved list of stocks here. And as you can see, pretty much everything is in the red. The ones that I flagged last week was ANZ, one of the supermarkets, probably Coles is my preference, but Woolworths may do. I'll just have to do a review on the sale price. And Wesfarmers was the other one. So if that got into the lower $88 range, it's still on the high side. I'll just do a refresh here. We'll have a quick look at the overall market to see what happened. It hasn't dropped as far as was indicated by the NAB indicator of what was it? 0.96%. It's currently down 0.41 on open. I'll just do a refresh there. And that's actually retreating, so it's coming back a bit. I'm going to have a look at some watch lists. I'll just do the ASX 200. I've now created some watch lists for the ASX 200. And now forgive me if some of these entities or companies are no longer in the ASX 200 or if some are missing because this ASX 200 index does change, I believe, every quarter. So I may not be on top of, every change. So I'll do my best to keep that up to date. However, you may see some old ones or some that are missing in that list. So there's a range. The companies that have gone up in price, I'll just do the top, say 5. We've got Genius Energy, which is a utilities, that's up 5.5%. Meridian Energy up 4.1%. We've got Steadfast Group, they do insurance, that's up 3.3%. Virgin Holdings, which is the airline, 2.5% increase. And the last one is Ora Banda Mining, which is a gold miner. It's up 2.6%. And we'll have a look at the negatives. Okay, so we've got PMV. That's down 4.97%. That's Premier Investments. That's a retailer. And then we've got 4D Medical down 1.93%. Nexus Energy, that's down 2.19%. PLS Group which is also a minor, down 2.53%, and Drone Shield is down 1.18%, so that continues to fall there. All right, so I'm just going to have another look at my approved list and see if there's an opportunity I can take. I do like VEA, which is Viva Energy. They do the Ready Express stores here in Australia selling petrol. We've got the fuel excise coming off today, I believe, or maybe it was on over the weekend at the end of July. So we'll see fuel prices start to increase here in Australia again due to the taxes coming back on. We've got Aristocrat down 0.92%. I did have that before. I am open to rebuying that one. It's not a stock that I disliked. It's just that it's a stock that I paid too much for, or just the timing was wrong, and then it fell away, and then it took me like 267 days to recover. Our Centre Group, which is a property, they do all the Westfield shopping centres here in Australia. NAB's down 0.63%. Commonwealth's down 0.61%. I like that at around $170. It's just a little bit on the high side, but I'm open to doing a bank. I'm also open to doing a supermarket today. Wesfarmers, like I mentioned earlier, once that gets to around the low $88, I'm happy to purchase that one. Macquarie, I'm feeling like it's too high. JB Hi-Fi's on the high side for me. Sigma Group, I'm keen to get back into that one at around $2.80. And Accent Group, which is my long-term hold there, is at 70 cents. I'll just update the portfolio, which is pretty boring at the moment because we only have one trade in there. That's 70 cents. So that's that long position that now's 571 days since I've had it, and I'm down 69% on capital and 63% after adjusting for dividends there. So on a $40,000 investment, that is down 25,000. And for that to get back, if we have a look at my fall gain ratio calculator, if you're down, let's call it 60%, it needs to increase by 150%. So it's currently 70 cents, and 150% is 1.5 of that. It's got to go up $1.05, and that'll take it to about $1.75. I think that's a little bit wrong. I think you have to do 2.5. Yeah. So it has to increase by $1.75, which is 1.5 times this 70 cents. So, or is it 2.5 times? 2.5 times. Yeah. Yeah, so 100% is double, and 150% is double and a half. So it's got to go up $1.75 to get to 245. That's for my capital component. So that may never happen, or it may take, many years, or if they have good trading updates and increased margins, increased sales, we may get there. But at the moment, we'll just sit tight with that one and just use it as a learning curve. We'll have one more refresh, and unless I can put a trade on, I will leave it there. So Viva Energy's come back a bit. All right, so Commonwealth's climbing as into negative. So it's and now we've got a couple of items coming into positive. So the retail, the two supermarkets now are in positive territory. It actually hasn't been as bad as what the NAB indicator was showing. I'll just check out the bank only watch list that I have. I might just add a new bank to that. Just one moment. BN. Just out of curiosity, I'm not really interested in the smaller banks, but it's good just to see what they're all doing. But I noticed on the weekend I was missing Bendigo and Adelaide Bank, which do obviously Bendigo Bank. Okay, thanks. Okay, so yeah, generally they're all down. The worst one is Commonwealth, 0.68%. Let's just have a look at Commonwealth, have a look at the share price, and calculate whether we would be able to purchase that and exit that comfortably. So what I normally do is start with the current share price and add on my margin, which is, I'll bring the calculator on screen. It's 2% margin. I also like to cover the fees. So 0.2, that's for 2%, and then another 0.2 for the fees. So it needs to get to $180.38. And then the quick test is that reasonable? So if I have a look at the graph here, it hasn't been $180 since April, which is now 5 months ago. I'm not saying it cannot get to $180, but it's a fairly mean feat to get to there. So based just on that, I would say, no, I need the price to come down a little bit more. I'm always looking at, what I'll be able to sell it for reasonably. So that's a no at this stage. Are there any of the other banks? I thought ANZ would be. No, that's still a little bit away. It needs to be around that $35 mark. But let's just do the same analysis on that. So $37.28. Get my calculator up. 37.28. So it's got to get to $38. Let's have a look at a chart. And so $38 is, I'll put it on a bigger one. $38 is there. So again, this one has not been at $38 since around mid-April. So the alternative is to purchase it and then just take a smaller margin, or just wait a little bit longer, which is what I'll choose to do. Go back to the watch list again, and then banks. Okay, Westpac. The other one I do is just look at what I previously purchased. So Westpac I recently did sell there. So I paid $36.70 and sold it at $37. So that's over that price that I actually recently sold it for, so I wouldn't touch that either. So I won't be doing any banks. I'll just have one more look at the approved list, and then we might get on to some paid work for the day. So Aristocrat, let's have a look at that. 63. What did I pay for that last time? 63.80. It's actually 63.68. So it's at around that same price now. I'm open to to purchasing. So let's pull up a graph. So we've got 63, 68, add 1.022% to it. It's $65.08. Is that reasonable? Yeah, it's only just got over 65 for the first time in about 9 months. It's not too far away. It has had a big increase over the last, where's my measuring stick? So from, say, here, mid-March, through to today, it's up 42%. That might be a bit of, a bit of an extension. So what I'm getting at there is perhaps that climb was too steep and maybe the market can't sustain it. So we'll just watch that a little bit more. It's not a no. I do like that stock. But it might just be a bit early and we need to see what it's going to do. It could have climbed and then it could just fall if we just have a look at a larger period. So let's come down, up. Yeah, I don't know. We'll have to wait and see. So we'll just give that a few more days, see if it falls away, if it goes sideways, or if it increases. I probably wouldn't mind just for a little bit of safety to purchase that a little bit less, maybe around the $61 mark. That's the crazy thing with share market trading is you want it to fall to purchase it, but that's a negative move until you purchase it and then you want it to go up. So I'm not very good at purchasing stuff on the way up, whereas I do have people that, people I know that they won't touch the negative. They're more happy to buy something that's increasing. So yeah, it's just something that I'm not comfortable. Like I can't look at Coles and go, oh, it's up 0.33%. Let's jump on. I'm more likely to go, oh, Commonwealth's down 0.68%, and then let's jump on that to get the rebound. So, um, I think I'm still hamstrung. So I'll leave it there for today. We'll do a market update this afternoon, close to close, unless I do take a position. I'll try and cover that live, just so that you can see my process and my calculations and putting orders on. I do have a family commitment this afternoon, so it may be after the market. We'll see how the afternoon pans out. Otherwise, have a great day. Thanks for watching and happy Monday.